G'day everybody. Today I want to talk about the ongoing financial crisis that has gripped stock markets around the world. Despite the impression of a small recovery this Tuesday, I do believe that the fundamental underlying characteristics that are driving this market into a state of disintegration are going to continue, and that may sound alarmist and extreme. However, I beg to differ. Facebook, Amazon, Apple, Netflix, and Google, the FANG stocks, all experienced a major sell-off in the aftermarket yesterday following the close of the most horrific day markets have seen since the financial crisis of 2008. That's because there failed to materialize any U.S. government-sponsored asset buying at the end of the market, which typically signals that the cavalry has arrived in the form of today's working group on capital markets. We saw plenty of window dressing in the wee hours in futures markets as financial system plumbers attempted to paint a rosy picture in time for the open in New York on Tuesday morning. There is zero reason to presume a bottom has been reached. If anything, the spectacular gyrations in bond and stock markets demonstrate rather succinctly just how vulnerable our financial system has become. To recap our position since the onset of the historical quantitative easing in 2009, the injection of further liquidity into a financial system that is already overflowing with liquidity and reducing interest rates to the point where they have become a storage fee for capital is tantamount to pouring gasoline on an already raging inferno. The signals flashing red in yesterday's market action indicate that the increased pressure of more debt, more fabricated capital, and non-existent interest rates have once again reasserted themselves over the collected delusions of central bankers and the financial mandarins propping up the near-uniform cadre of reckless and irresponsible governments concerned only for their own self-preservation. That successive governments have chosen this path instead of responsibly interpreting the market's myriad warning symbols demonstrates in no uncertain terms that the search for responsible government that characterized my grade 9 studies of the history of North America from the 17th century to the present has yet to be realized. When market participants dump assets because the U.S. government failed to step in and shore up asset prices as a spoiled child would demand sweets, it is obvious that supply and demand have become subordinate to headline blackmail as the key economic dashboard for government. Increasingly, investors who are not sufficiently high-ranking in the pyramid of access to government largesse must become self-reliant and learn to ignore the false data being broadcast in mainstream media as the principal tool of communication to the public by a government compromised from within on all levels. The coronavirus situation is a case in point. The Center for Disease Control had issued guidance to healthcare professionals stipulating that the patients were not to be tested until exhibiting acute symptoms, a remarkable failure in the very institution at the pinnacle of disease prevention in America. Nonetheless, representative of the quality of information being driven into the public realm from top to bottom through media. A far more trustworthy approach in assessing the likely penetration of a coronavirus into the global population can best be conducted by a rudimentary analysis of the disease and its known characteristics using basic mathematics. If the incubation period can be as long as 14 days before infected individuals show symptoms, or those individuals can travel freely until diagnosed, merely infecting all they encounter until some form of isolation is prescribed, illustrates how we should be operating on the assumption that the virus will permeate every corner of every city in every country, independent of travel restrictions and quarantine. Furthermore, the existence of two strains of the virus this early in the evolution indicates a rate of mutation that will circumvent any ability to vaccinate or eradicate pharmaceutically known strains of the virus before they are able to mutate successfully. At the end of the day, the disinformation being broadcast by government sources through media pertaining to the coronavirus, in conjunction with the evidently false integrity of the global financial system and its ridiculous debt foundation, also broadcast by government through media, renders both of those institutions untrustworthy, in my opinion, to say the least. It is our long-held expectation that the imminent collapse of the U.S. dollar and the global financial system is a prerequisite for a much-needed recalibration of the global monetary and financial systems and is once again, as in 2008, underway. Back then, however, the Fed and the US government did have the novel option of mass stimulus in the form of capital fabrication and debt proliferation, along with zero interest rate policy to unleash on the besieged financial system. These tools are no longer available. At least, not unless a fresh level of insanity is to be descended to by the powers that be. It is conceivable that we could start seeing stimulus measured in trillions of dollars as opposed to billions. It is also conceivable that new financial instruments with government-assigned values could be launched alongside campaigns of coercion against the global ruling class to legitimize them with acceptance and vocal support. One thing is certain, the emperor is now known by all to have no clothes, and more are willing to publicly proclaim that to be the case as the beneficiaries of the legacy debt fraud become fewer and fewer as interest rates evaporate. Absent regime change across the entire G7, this situation will only persist until its only possible outcome, which is a return to tribal warfare amid Darwinist survival rules. If that doesn't worry you, then your optimism is worthy of Candide.